But like we always do, we want to have a look at the supply side story first, and then we'll come in and we'll have a look at the demand side story second. And so how we're going to do this is we're going to have a look at a couple of different elements here. The first thing we want to share is a couple of charts just sort of giving you the macro across Australia. So what we're looking at here is the new listings, at the national dwelling level. So what we're seeing here is a comparison of the 5-year average versus 24 and 23. Now, the good news story here is on a macro level, we're above that 5-year average in terms of the number of new listings coming into the market. So that's quite healthy. But then we actually have a look at total listings, which is really what we need to assess in terms of from an overall supply side. Is you can still see that over the 5-year average, we're actually still quite low in terms of that. So compared to the 5-year average, we're still 15.9% down, aren't we, Bryce?
Yeah, and I guess that's really the story for why most markets have performed well from the majority at the beginning of the year. We'll talk about a couple of the exceptions shortly, but the sense that if you've got 3 oranges and 5 people want to buy it, Ben, that's always going to put at the very base price pressure floors, but 5 people want to buy oranges and only 2 oranges to buy means it usually puts a bit of upward price, and that's what you'll see across some of the markets, and that's the important part. And to some of the other markets that are doing well too, as we'll unpack them, that is also the reason why you have some optimism why going forward that resilience will stay in those markets, because again, there's no sort of big U-turn on that trend as well. But there is an exception to that, and we will get to that shortly. But some of the bigger markets are actually on the flip of what I just said.
So we've now just jumped into our research platform, and we want to do a little bit of a deep dive into telling that particular story. So this is this stock on market story, and we can see that over time, what we are looking at here is the percentages of the overall stock. So that's why it only goes up to 2.5%. But let's sort of tell a bit of a story here, because again, this is that sort of two-story market. So we know Adelaide, Brisbane, and also Perth. Look at the trend line there in terms of, we can really start to see that in terms of the availability of stock and supply is quite low and continuing to fall as part of those particular stories. And so that has bode well for underlying demand exceeding supply, and that's obviously putting pressure on house prices in those particular areas. Now, if we look at our two big capitals side by side, and remember just that the volume, that the actual volume of stock is enormous compared to those other cities. You're talking about 6 million people, 6+ million people in those two capitals. So you can see here that 1% movements are significant in terms of the actual numbers in behind them, compared to some of the smaller cities like Hobart, where you've got a smaller a volume that you're dealing with here. So you can see they've been relatively steady. Okay, so there hasn't been any sort of trend line us ticking up and ticking down. And one could argue that's been what's probably supported Melbourne in a sense, in terms of why we haven't seen a further price correction in that market, because the market's sort of in balance in a way. It's sort of finding its way through that particular story. Now, then, if we go to sort of markets like Hobart, Darwin, and also Canberra, we can see that the actual trend lines are actually on the up. So it means that, the absorption rate of what's coming into the market is actually going in the opposite direction. So they're not absorbing the supply that's available for sale in those particular markets. And that's why we have seen those markets performing in a negative or flat sense over the course of the last couple of, over the course of really the last part of the first half of 2024. Now, you can see that there is some trend lines. So Darwin is starting to show some trend lines down, and we'll start to see that a little bit more in some of the data coming through as well. That's sort of why in that sort of January period, I said that's a real smoky play out there. And we'll talk more about why that's a bit of a smoky play in terms of what's going to happen in that market over the next couple of years. But you can see effectively that's what we're looking at. So then when we get back into, the sort of data that we wanted to talk to, let's take a look at this chart in terms of what it actually means. And so as we sort of look at a snapshot, so we've got a couple of great snapshots here from our good friends at CoreLogic, and you can see what we were talking before about. So when you started to think about what was happening in the Sydney and Melbourne markets during that sort of end of the selling season in December of last year, you could see that you've got new supply in New South Wales and or Sydney and Melbourne up 10.9% and 19.3% respectively. The overall Sydney supply was 1.5% higher at that time. And then in Melbourne, you can see that the overall supply was 9.6% higher. Now, and again, you're talking about 30,000 properties and 21,000 properties for 30,000 for Melbourne, 21,000 for Sydney. And, that's the context I was telling you about.
Yeah,
In
compared to
Hobart,
1,500 in Hobart, for example.
yeah. And Darwin, it's 980.
Yeah.
So you can see that dispersion or significant variation between those sort of actual count number compared to the size. Now, what's leading that sort of story here about Melbourne's challenges from a price point of view is we can see that looking at the total listings, that's now 11.8% higher than what it was, compared to a 9.6 back in December. And that's a reading of, the 18th of August. And so, but we can see that there has been, Sydney is still quite a tight market. It hasn't seen any additional supply come on. And then we can also see here, the story of Adelaide and also Perth. And now, Darwin has also got that strong story of sort of a reducing supply off very low numbers, but still a reducing supply. And the one that has turned the corner also is Canberra. So we can start to see Canberra from having an overall 13.4% increase in supply over the 12 months trailing. It's now down 13.2% in terms of overall supply. So you can say that the Canberra's had an absorption story that's working itself out, and it's now becoming more of a seller's market than probably what it was as a buyer's market over that time. Now, there's a couple of interesting points here, and I want to credit Eliza Owen with some of this data as well. And that is that as of the week ending the 18th of August, we did see that new listings are tracking 2.5% higher nationally than 12 months ago. So there is a slightly higher number of listings coming through. And the other important point is that that's still 11.8% above the previous 5-year long-term average. So that does tell us that there's a little bit more supply in market, and that puts downward pressure on prices in the short term. But finally, another nice bit of data, and this is why we're doing this mid-year update, is because through the research that Eliza's done over the past decade, what usually happens is spring is the selling season, as we've all been told. So how much new supply does come on? Well, Eliza Owen's research in the past decade has shown that 18.2% increase in new listings over this period. So we've got that 2.5% out now. So how quickly is that going to come? Now, and how much of this new stock is going to be absorbed? Like, in other words, how much buyer demand is still in the market compared to the new stock coming on? Now, in a lot of cases, there may be, because there's no other stock to buy that households are looking for to upgrade or downgrade or whatever, they don't then list their property, right? The market, especially in some of our bigger cities like Sydney and Melbourne, which are balanced or in Melbourne's case, slightly negative, you don't know whether people will just basically sit on their hands and they'll have that risk aversion, that loss aversion, that, sort of that human behaviouristic sort of story that we've talked about before. So that's an interesting story in terms of how that might play out. So
and
that's the scene setter
to really absorb that too, Ben, because supply is the enemy of growth, right? So if you can actually see a lot of I guess cause and effect here when you've got that much additional supply coming on, and then you go on to the opening read that we had around where the around the grounds was looking. Those with listings less have had upward pressure up, and those with listings more have had downward pressure. So it's a very, very important metric, and it's a very important concept at the bigger level, because I know a lot of our listeners want to try and understand this from a big picture level as well, which is why we spend a lot of time going supply first, then we'll unpack demand. But we're going to talk through the regions here as well.
Yeah, I think a quick little summation of the regions we can also see, in terms of new listings and total listings. So you've got New South Wales sort of flat. You've got rest of Victoria with 16.9% total new listings. So that's going to put downward pressure on value in the short term. Then you've got rest of Queensland, which is negative 13.8. So that's where, we're starting to hear the murmurs in the property sector, and all of the in our trade. That's the trade that we live in. People are starting to talking up the regional areas of Queensland as being good buys. We've got a bit of a warning at the end of the show around that one. In terms of rest of South Australia, negative 10.6. Rest of WA, negative 23.2. Rest of Tassie is positive at 8.2. So that's downward pressure on prices. And Northern Territory is negative 9.2. So that's going to put upward pressure in terms of, because low stock means, obviously there's a risk of, or an upside in terms of future price growth that you were just talking to, Bryce.